Hey, Dave Knight here, TradeCrazeY.com. Will be the new website. 123daytrade.com is where you can find all my older content, by the way. 123daytrade.com. And I'm building out the TradeCrazeY, TradeCrazeY, where I have a craze. I'm not crazy, but at least that's what I'm going with. Today I want to talk a little bit further about my favorite market that I like to trade. It's crude oil market and the crude oil futures. And I want to take you into my mind and how I look at and view a particular trade and concept that I like to call RBV HVB. It stands for red bar volume, high volume bar. I've used it quite consistently over the last 10 years that I've been trading, but the spreadsheet that I put in front of you right here is something that I have developed, and it helps me determine profit targets more than anything else right there. And it's based upon concepts that I've developed over the years and whatnot. So I really don't want to get into that today. We'll talk about that a little bit further. What I want to do is take you into the mindset of my mind at this point and why I took on a 2 contract long trade today and the timing of it. Now I'm trading the afternoon only right now due to my work schedule. You could trade mornings and afternoons, but I would recommend that you use one session or another session. Don't both. Normally you're looking to trade a one session or a second session. My second session that I look at, my time is 12 to 2:30, roughly any given day, depending upon when I get home and whatnot. But definitely from 1 o'clock Eastern time to 2:30, or Chicago time, you're looking at was that 12 to 1:30 p.m. CST. So this was a fairly simple trade to take on if you know what you're looking for. Now I've got this highlighted, right? Well, I don't have it highlighted yet, but we're going to highlight one particular volume signal, and we're going to look at some trend lines that I draw on the charts here. Now these trend lines are going to carry forward to help you determine if it's a valid trade or not. So what I can tell you about this particular volume bar is right here is where it came in, and here was the low that it posted off of that volume right there, the red volume bar. So RBV, so it stands for a red volume bar, or RVB, excuse me, our red volume bar. And then it also ends up being highest volume bar, and that's what that stands for. Highest volume bar, red bar volume. Now the one trade platform that I found that you can utilize volume to help you see it a little bit better is CTS. It's Cunningham Trade Services. You can access it through TopStep. Once again, TopStep's the product that I would highly recommend as you're looking at trading in the futures market and taking on any trade situation that you want to. Like I said, I like to trade the crude oil futures market. Maybe you like to trade the ES, the Russell, or some other markets along the way that has some. The key to any futures market is volatility. The 3 V's of trading are, right? So you got the volume, you got volatility, and then you have velocity. Those are the 3 V's of trading that you're looking for. How quick is the market moving? How much money can you make in a particular trade, and what kind of volume does the market have? Those 3 concepts is what's going to help you as an overall trader make money in the futures market overall. You're talking to a guy that's made it in the funded account over 15 times at TopStep. So I kind of know what I'm talking about. So what I'm doing right now is fast forwarding to, you can see I made 111 ticks today. We're fast forwarding to the time period that I wanted to get into. Now, what makes this an easy trading day is this is the only time that we went over the 1000 volume bar on the red after the initial one time we come across it, right? So we have another attempt at a low again, and this time the low kind of holds. It doesn't push down very far after the entry point. Now, this is the low of the previous volume right here. There's your trend line, and it goes from here to the low right here. So if we would actually, let's just go with the horizontal line. This ends up being the low of the trading session that I believe this was when low of the trading session during the day. So now what we need to do is determine a good point to get into. where is a good point to get into this trade. Where I determined a good point to be into the trade is in between this volume going up, this setup here, and once again I'm looking at my time. So after 12, so I saw all this around the 11. I was here at 11 and I was looking and I'm like, I don't really like it, don't really like it. I still don't like it, and all of a sudden I like it. Why do I like it here? Well, when you're looking at different things in the futures market, you notice I have a couple things on here. Let me get the screen draw tool again. This right here is Williams percent R. And this right here, on the same period, you're looking at the ability to be able to see something in the market itself. What do you see? What I know is that this low is holding. So I know the volume bar is on the red side, that the volume is holding. I know that this downward trend wasn't able to do much damage after it went down. So these are the things that I know. So what I am looking at is where's a great place to come into the market right now. What I do know is that I have like a Gann signal coming down this way, and I have a Gann signal going up. So I'm looking at this, but then I'm seeing this right here. So here's your key to the trade. You see the trend lines that's drawn on the chart. I was willing to take this trade at the long side and risk this area right here. Why? Because volume is showing me that it's forming a bottom. That the last time we went down there, the red side of the volume market is telling you that this is a good setup to at least attempt a trade setup. Now, what was the profit target that I went after? The profit target on an upside, normally what I want to see is 1.5p at minimum to about 3p if it's a really good move up. I took on 2 contracts right here, and 1.5p today, if we look at, whoops, I got to stop the screen draw right now. Let me stop that. Let me stop the screen draw. There we go. And so what do I know? I know 1.5p today, our break-even decision I like to call, is 57 ticks. So 6996 going to 7053. That was kind of my target zone that I'm looking at a particular trade itself. So 57 times 2, you can figure out the math there, 114. I gave back a little bit today on one of my trades. So I did make 114 on this particular trade, and I was able to get out. If you notice, this is where the exit was right here at 70.53. I decided to move up to it. I was willing to take on a 1.5p. If I didn't want to make a move, I get out. So the movement itself that I got involved in was a very short period of time. Here's my entry point, and here's my exit point. And there's your 57 tick move. And it basically goes from, let's call it 11:55 to about a 20-minute trade, all said and told. Each particular contract gets 57 ticks in this case. So combine is 114 ticks. This is stuff that comes naturally to me right now, to see these things, to be able to recognize a good, and I'm not if you know, those that have watched me in the past know I don't like taking on long signals. Especially, I do not like taking a long signal on if the market falls. So one of the general rules that I want you to remember here, if I can give you any tidbit at all at advice, don't trade long below S2. And as a general rule, don't trade short above R2. Although there's some exceptions to that when you get extreme volume numbers. So that's the general rules that you want to be able to follow. Not to sell, not to go long below S2, and not to short above R2 in any given trading session. If you can follow that, then you know the magnetism of the market can bring you back towards the pivot point. So S1 here, R1 here, and your pivot point. You know that the magnetism of the pivot point is a very strong factor in trading. So volume, S1, going back towards pivot. That's kind of the philosophy that I like to trade. You know, you're going back towards pivot. You're going back toward when the market's uncertain. In other words, it's going to go back to even. It's going to go. In other words, maybe Bruce Lee said it better than I do. The market likes to see, or the market likes to go back to the level. Uh, um, he doesn't talk about trading, but he talks about how water flows up and down and it seeks its own level. So that, in a sense, is kind of what you're looking at as an overall as a trader. Hopefully, this is not too confusing for you, but the honest to goodness concept here is to be able to have a trading system, to know your numbers that you want to go after, to use what I call the 3 V's of trading, to be able to take advantage of situations, so volume, velocity, volatility. Use all that. Find that market that's got volume. Crude oil's got lots of volume. Got velocity means it can move quickly to your favor, quickly and make a good amount of money. And then you have the volatility of the market. The market itself is rewarding. It will reward you for your effort that you put into the market. I hope this makes sense to you. This is Dave Knight here, kind of coming in here with another tip for you at TradeCrazeY.com. I look forward to sharing more insight with you as time goes on. Once again, Dave Knight here at TradeCrazeY.com. Thank you for watching. Thank you for being here, formerly of 123daytrade.com.